also welcome in Dikshit Mittal, the Senior Fund Manager Equity with LIC Mutual Fund. So firstly, to start off with, the RBI has continued to maintain its stance. Now market experts are expecting the rate cut to happen in December. How are you reading into what RBI said in its meet today, and what are your expectations going forward?
I think RBI has clearly indicated that rate cuts are going to happen. It's just a matter of when, not if. So accordingly, we are positioned to that extent that rate cut are going to happen. Though timing may be little uncertain whether it will happen in December or maybe later. But what we think is within the next 6 months, we think we are decisively on the rate cut trajectory.
Right. Good afternoon, Dikshit. This is Cheryl also joining in the conversation. And let me just continue with what the governor had to say. He did flag off some of the risks coming in for the NBFC players. Now you have the press conference that is going on where you have RBI Deputy Governor also talk about that select NBFCs are showing elevated slippages and high credit costs. How are you actually seeing this NBFC space? Have you actually looked at any of these NBFC names, and are they a part of your portfolio firstly?
Yeah, so one has to be very selective while investing into NBFCs. So the NBFCs which are basically into more secure space or which have a history of basically good credit appraisal and all. So I think that one needs to look favorably. But obviously these things keep on happening. Some of the guys take larger risks, so that reflects in their overall historical NPAs. But that reflects in the short-term growth rates also. So one has to be very careful. The NBFC which have been growing very, very fast. And the segment which they have been growing, if it's a very, very high risky segment, so to that extent, one has to be cognizant where one is investing. So coming to our portfolios, we have been very selective in terms of investing. So NBFCs which are mostly into secure space or which have a good track record. So even though they may be lending to some of the unsecured segments, but who have basically shown their skills over the last 3-4 cycles, I think those have been invested into in our portfolios.
So Dikshit, if you look into the markets broadly, last week the story was money flowing from India to China. This week again, the story has reversed and we are seeing some kind of an up move in the Indian markets as well. So how are you dealing with such kind of volatility, and post the correction that we had seen recently, any pockets or any sectors that are looking attractive?
So I think this China trade has been a short-term tactical trade because prior to this rally, a valuation gap between China and in Indian market as a whole, I think was very, very, I think high. So I think we were trading at 20-21 times 1/4 P multiple, and China was in single digits, high single digits. But after this rally of 20 or 30%, I think to some extent that gap has been bridged. And this has been a short-term tactical trade, but I don't think it is will impact any long-term investors, because long-term investors, they look at the kind of growth any market is offering, at the same time the return on capital which that market is offering, and the policy stability and the kind of broad base of the growth. So I think looking at that, India is still, I think, placed very well from the medium to long-term perspective. But this short-term correction, this keep on happening because the Indian market has also given very, very robust returns. So we needed some kind of you can some kind of excuse to sell off. I think that has come in the form of China doing well. But we don't risk too much if one is taking a slightly longer term view.
Right. So talking or rather extending that point of view, then what's your take coming in on the entire IT space right now, actually, Dikshit, given the fact that we are on the cusp of getting the Q2 earnings for the IT majors? What's your take coming in for the IT sector going ahead?
So we are more or less neutral as a weight in terms of the IT exposure, but we think incrementally things are turning positive. If we look at the order books of these leading IT companies, I think they are all-time high, and incrementally looking at the kind of commentary these companies are giving in the wake of expected rate cuts in US. So to that extent, some of the IT spending may come back maybe in the second half of this year, and we'll see incremental positive growth returning to this sector as a whole. But on a slightly medium to long-term perspective, I think this sector is poised to grow because globally, cost-cutting, digitization, cloud migration, I think these are the longer-term themes. And to that extent, Indian companies are well placed. So we are currently in the light of sharp rally in the IT stocks, we are close to neutral. But over the longer-term period, I think these companies have their merits to be invested in.
Thank you, Dikshit, for joining us and for giving us all those details and for putting things into perspective.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.